Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors. March 21st, just before the close. Let's see how the market takes us into the weekend. But so far, flat week. Doesn't feel that way with the volatility. We've had some rips, we've had some dips. We're going out flat. What I wanted to do today is try to get a picture of where some broader asset classes, indices, and sectors sit on a bell curve. A bell curve just plots price action. Today we're going to look at momentum and what do we need to know heading into Monday about where different asset classes and different securities sit that we own or that we're interested in owning. So let's take a look at this graph. On the far right, represented by 80 to 100 and 100 and above in red. Those are the areas that have been trading with very strong momentum. Gold, IFA, that's the international developed countries. The euro, represented by FXE, real strong momentum. But when we do get into this area, and I like to denominate anything over 80% and up as slightly overbought to extremely overbought, when we get to 100 and above, that's where gold sits. I'm always tending to be a seller, not a buyer, but we'll take a look at where gold trades over the next couple of weeks. Those are areas that if I'm long and I'm a trader, short-term investor, maybe looking to take some profits here. Flip side, let's look over on the oversold area of the market. You see the dollar, 80 to 100% oversold. That's represented by DX/Y. Look at the next column over. Quite oversold. A broad swath of U.S. indices and ETFs representing different sectors. That actually is an improvement over last week. So momentum to me is starting to improve in the U.S. equity market. May not feel that way day to day, but that's what the numbers are telling us. And numbers are numbers. Math is math. Remember, you can trade, you can invest with two hands on the piano. One hand is looking at fundamentals and some macro work. The other hand is looking at pricing and supply and demand. You can have a perfectly plausible story for an equity or a bond or a commodity, and the positioning within that story leaves it vulnerable for a move. So I mention this because we feel down here, and specifically I feel, that U.S. equities are probably a better buy than a sell here. We have two real contrasting emotions out there. And you get this a few times a year, 2-3 times a year. You get people very nervous that are sure the equity market's going to fall apart. The other half are equally as sure that this is a buy the dip moment. Buy now. Don't miss it. You know, maybe we're somewhere in the middle, and different sectors and industries and indices, such as the NASDAQ or the S&P 500 or the Dow Jones, are going to bottom and improve at different times. This week in Tactical Trend, we added to a capital markets ETF. Not added to, initiated, KCE. They've held up well, trending very nicely, but have had 4 or 5 weeks of intense selling. Strong trending sectors will always undergo selling. As long as they don't spend too much time below a trend line or a negative territory, they're a candidate to bounce back. So we added there. One sector that's interesting to us right now, and some people may close their eyes and cover their ears when I say this, semiconductors. Semiconductors have been the whipping boy over the last 4, 5, 6 weeks. But on our work, on our analytical work, momentum has improved. The 10-week moving average where semiconductors are trading is improving, as well as the 30-week. Now, are they great? Are they out of the woods? No, they're improving. What we want to see is industries, sectors, or a security improving. So right now, similar to when we were talking about China, 3 months ago, remember I used almost the same words. I said, close your eyes, hold your ears. You're not going to want to hear this. But China's negative momentum appears to have worked itself out, and things are improving there. We played that through an emerging markets ETF, not China directly, but that's been helpful. That's been a helpful security in our global balanced and global equity accounts. So the key being, you have to keep an open mind to when securities have wrung out the selling and used up all the buying. Again, when we're talking about momentum, it's shorter term in nature. We're talking about 2 weeks, 4 weeks, 6 weeks. When we get into longer term holds, momentum means a little bit less, but it can be an outstanding tool for entry and exits. How about bonds? I'm filling in for the moose this week. Bonds were quiet as well. Bonds were a little more quiet than equities. Equities were flat but volatile. Bonds, they're just kind of quietly back and forth. Last week I discussed spreads. Spreads are what junk bonds yield, or what you're willing to accept to own a below credit grade instrument versus investment grade, often called IG. If you ever hear that on TV, sometimes they throw out all kinds of terms. IG is investment grade. Here's what I think when I look at the bond market. Let's forget about where rates are going. If the equity market and the bond market were on the precipice of falling apart, I would expect junk, and you can follow junk bonds or high yield through an ETF, JNK or HYG. I would expect either of those to be trading much worse than they are. As a matter of fact, as I leave them up on my screen, just as a tracking instrument, I continue to be surprised by how well they hang in there. I mean, if the market is in deep, deep trouble, I wouldn't expect, we're on the verge of a recession, and inflation's coming back. If all that was true, and by the way, it may be, I would expect high yield to have cracked already. The fact that it hangs in there forces me to be more patient with my other positions. So we use that cross-asset work often. Sometimes it's a guide, sometimes it's just late. Remember, whoever's telling you they know what's going to happen next month, well, what do we call them? Liars. So we'll see what happens next week. We'll see what happens next month. We'll pay attention to every detail we can, both fundamentally and analytically, because momentum is real, buy signals are real. So enjoy the weekend. I'm sure next week we'll bring more tricks. We'll stay on top of them, and we'll see you Friday.